Alright, good day. This is African Crypto Warlord from sunny side Zambia. I hope you guys are doing well. If you guys have been watching the previous videos, what we've been looking for is this contraction on the 5-day in volatility and waiting for it to expand. Okay, so we already, like 10 days ago, established ranges to the downside in this region. So what we're going to go and do is we're going to see how well and when is positive drift going to kick back in to get XRP back up to a monthly mean where it drastically just fell from. So right now we're going to start at the 5-day. I'm going to make this quick as possible. I just posted a video and my audio wasn't working. Yeah, this one's working. Okay, I hope it is this one. So we're going to go looking at Shannon Entropy. Shannon Entropy to the 5-day. Volatility's expanded. That's this one. Whilst negatively correlated. That tells us, boom, pump to the downside. Okay, so we've smoked our monthly mean, which was 36. We've heard that number before. In the previous video I stated, if we cannot close above this in the next, from now, 5 to 10 days, then we're going to look for more downside as volatility starts to contract. So these will be red for 2 or 3 candles. As volatility starts to contract, Pearson correlation will move positively correlated, and that's going to add more drag to the downside. So in the next 5 days, Shannon Pearson correlation needs to play some games here and turn around. So the next 5-day print is what we've been basing a lot of our new trend off of. So on the 24th of August, we're going to have a lot more people looking to enter for long-term positions. So currently right now, the bravest are either getting wicked out or they're getting good entries at the current data. Okay, so 3-day expansion happened to the downside. That's our current candle that we're experiencing right now through our daily mean, weekly mean, and monthly mean. Boom. So we've hit one of these outliers. This is a previous monthly mean over here. This is a previous outlier to the downside of that monthly mean, that red dot, and we draw horizontally. So we can see that currently 2 months ago, 1 month ago worth of data is still in play, right? So these are market memories. If I, in my earlier streams, talk about market memory, that is a place for market memory. Furthermore, XRP at a 32 cents, 17 isn't a bad observation. And what we were saying whilst we were down in this region, before we established positive drift that you can see coming through the book here, we were looking at regions in here, which is 29 cents. The 29 cents 16 is a bullish div mark. There's a whole bunch of areas here that can set a bullish div, but as soon as we get to that monthly outlier, 28.62, you can expect maybe a little bit more wicks to the downside, right? And that could end you up at 27.07. So that is what happens when volatility starts to now steam up and positive correlation comes off of expansion and the volatility wave comes through. It's like a couple sets, man. You can catch them. So we're going to look for the volatility wave to the downside. We're going to look for it to the upside. I just want to go see if I can set up a distribution cone now. Let's see, make these big for you guys. Oh, come on, load. Not yet. We're looking for this one to hit contraction as well. And then hopefully these all pull back in. And that looks like it could be around anywhere from 3rd of September, 8th of September. So this volatility in the book has pushed out our distribution cone that we'll be able to throw up over here, right? So anyway, so back to the 3-day, back to the 24-hour day. Let's go. So 24 hours, let's get off this chart. Whole bunch of mean reversion distribution cone up here. So I would throw a distribution cone up on one of these things. I'll do that later. And then you'll see that we've definitely had our outlier events on a distribution cone to the downside. But we'll go back to our Shannon Entropy and establish ranges off a Shannon Entropy contraction, positive correlated. That's what's buying us up currently in the market at these levels. Is this happening on the 24-hour? Okay, we're hitting blue flash behind that. We want the blue flash to end, and then we will go looking for a long position. You always want the candle to close in this sense because you might get a good entry to the downside if it does look bullish to the upside. Okay, so this is still more expansion to the downside, but we currently have a doji over here with some green confusion. So a doji's coming to the book on the 12-hour perfectly alright. We see the signal of volatility is looking like it wants to start contracting while significantly negatively correlated. That's going to add us float on our next 12-hour candle to at least lift us up into this region, 3414. So I have some targets that I previously said in the video that didn't have audio. We will quickly review those as we get to the lower time frames. So Still more expansion to the downside. We'll wait for the blue flash. Confusion. So there's looking for end of continuation to the downside. What I'd go like to look at. There we go. Our entropy oscillator has told us that it's broken out of trend to the downside. We have a 6-hour mean reverting returns to the upside. We'll confirm with the blue flash that when the blue flash ends, that's confluence. Outlier happening, which will lead to more confluence. If that ticks through, that's going to push out this through. That's also having an outlier event. Returns will mean revert to the upside, at least to a standard deviation for a push. So on the 6 hour, in 4 hours and 30 minutes, you could say this is the trend point that it's looking to start contracting from. So we'll go look on lower term time frames to go look for drag to the downside. Okay, so some more drag to the downside. We have a bunch of dojis here. Data is quite easy to change. To put in to make this go red, given that we've had 2 dojis, you could print the next one just below the JMA, and I said that would be the push to the downside. But we currently have positive drift happening off of our 3 hour coming through the book. So volatility is contracting, and the direction of volatility, because volatility is going down, contraction, and Pearson correlation is not correlated to volatility going down, it's going to tell me price action is going to go up. So we call that positive drift, positive float. Positive float matches up with the 3 hour. That trend that's end over here, and we broke out of our mean as soon as we printed a doji, broke out of our trend as soon as we printed a doji, our blue flash is off. So this is the candle you could start to look for entries on the 3 hour. Now we're going to go look for the 90 minutes, see what's happening on the 90 minutes. So this is quite an interesting place. We have a super scalper coming through. This is a place up here at 3.417 cents for the current. If this is to pump up a bit, that is a good place to deny the 90-minute mean reversion. Given that we can see some positive drift coming in, it might be better to lift your sell orders over here. You might get a better price exit. Okay. Furthermore, I'm going to nail this point down with these levels as we get into them that I've thrown up here. Okay, sick. Contraction to the downside, that's turning around. So not sideways in a sense, but still returns on the next print look like they will be going down currently on the 90 minutes. So we're going to go look at the 45 minute. So we have some positive drift on a midterm time frames. We have some negative expansion volatility saying we're looking for way longer term downtrend to the downside. Our midterms are telling us we're looking for a little bit of up from here. Our intraday time frames, so our 90 minute and below, are telling us, look, this region here is getting a little bit more sideways, but we got to go measure between, is the positive drift or negative drift from the time frames around it, is that going to push the low time frames down more, or the low time frames matching up with our midterm time frames? And if that happens, we're definitely going to have a pullback to this region over here. So 45 minute contraction, that's confused, so we don't have to look at that. That's looking for returns, wanting to start actually returning. So these pump candles will be smaller. And given that that looks like a place that can be scalped, that would match up for a place to be scalped at the mean reversion that matched up with us at the 90 minute, looking for a pump into this region. So now we're just going to quickly throw it onto the 15 minute. I was viewing the 30 minute previously. It's a bit too much confusion, so we have another 3 minutes to print. The 15 minute was quite nice. This bull div on the 15 minute got sold out over here at the mean reversion point, but it looks like it's trying to save itself. It's trying to save itself and match the previous candle closes with some expansion to the upside. This is where the video was made without audio, so we broke through our reverse wave trend. As you start to close above the reverse wave trend, you might look for longer term time frames to start turning around as well. 45 minute, 90 minute, 3 hour and 6 hour looking to turn around if you start closing above the reverse wave trend over here. Okay, expansion to the upside, that's the 15 minute. I'm going to try leave us off. I'll put it on the 30 minutes so the targets look relevant, and then I'm going to throw them up on the left hand side. So contraction, lost significant correlation to the downside. So what I see here on the 30 minute at least is if this carries on contracting, this mean reverts, that's going to float us up over here. But as soon as Pearson correlation mean reverts and that's still contracting, that's going to add the dump. But if these go red, like you can see here, these columns go red, then that will lift us up at least into 3.489. Let me throw up these levels, considering you guys sat this long. Thank you so much. There's a level to the downside that I'll throw up here. Let me just make the screen big. Oh, come on. There we go. Level to the downside. So currently, if the bull divs that are forming on the 15 minute, 30 minute, if they play through, you're looking at 0.7% to the upside. And then from there, if they can hold their strength above these levels, start to look for at least a 34.89. So I'll say maybe 2 90-minute candles, and then the third 90-minute candle from this time. So over here, if you're looking at the timestamp, there, that's the time. 16:30 is a couple hours from me now, is an hour and 30 minutes. This is the time I'm going to look for more continuation in the market, in the trend, to see if we're going up or down. But currently, these are the levels. If I'm wanting to dollar cost average in, which I will be doing this evening, I will be looking, honestly, I want a low price, so I'm looking for failure here at least. And then when Saturday prints, we start to go back to our mean, right? So that's 5%. I would really like 5% worth of XRP. Make it a lot easier to manage risk off of this volatility that's coming here. But given from this region to this region, if we were to have a clean, solid pullback and we lift ourselves above 3639, the trend that's forming on the 5-day over here will tell us we're going up. Currently, we expected this pullback on our Shannon Entropy. Let me get rid of these things. On our Shannon Entropy, we expected this pullback. I'm just surprised that this candle is very big at the current moment. Okay, sweet. I hope that was helpful. So we have still more expansion to the downside. The next candle can expand to the downside. Previous videos, we've put targets out at 29.24. There's a previous weekly mean. There's a few previous weekly means in this region down here that can support this action falling. Right, market memory, previous data memory. Are there still buyers at that previous weekly mean or monthly mean that's down here? Because we were playing around here for quite a while. They will more than likely want to go test that, and that's where they'll find their safety nets, their security levels. So we can go look at that quickly. I'll put it on the 45-minute so that the data looks relevant when I throw up the VRE levels. Okay, that's cool. On the left looks nice. VRE level here. Okay, so what we're experiencing is, okay, no, we're going to have to put it on the 4-hour maybe. Okay, so this is a previous weekly mean, and that's sort of what we bounced off of. That was its first outlier to the downside. That's sort of where we are. We had data that both matched up here. There was a safety net. We had a daily mean that also printed in here. That's this candle getting bounced off of. Currently where we're at, we have a monthly mean that previously printed over here. So I'm going to look for target to the upside if this volatility expands quick for 3487, maybe scalp to the downside, take some profits for it to base off of 3415 if we're moving to the upside. Okay, flash on. That's what we've said. Looking for continuation, you can. That will be the first scalp if I can get a trade in the next couple hours. So that is our previous daily points that you can see coming into market structure, coming into market play. There's a weekly level here for it to actually be scalped and have a bad div form later on, maybe 25th of August, 24th of August, round about that region. Okay, I hope this was helpful. If you guys find this information useful, please do like and subscribe. Have a good day further, and I will definitely post a weekend volatility ranges video, as I think it's going to be a good time to maybe trade. We've had a lot of volatility get through the book. People are going to be trying to be very active, so we can expect some wicks places to get filled at. Okay, so I hope it's a good day further. Ciao bella.